I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show, we have with us Karl Jacob, co-founder and CEO of Bacon Protocol. Karl, welcome to the show, and thank you.
Thank you.
I'm excited to dive into mortgage industry, integrating cryptocurrencies and DAOs and how we can improve upon this industry. I feel like this is a great use case for blockchain technology, and I know your team at Bacon Protocol is putting a twist on it. So let's just dive straight into it with an overview of the solutions to start on what you and your team at Bacon Protocol have built around this industry, and then we'll dive into everything into mortgages.
Great. It sounds really good. Well, it's a big, complicated industry that needs a lot of help. So Bacon Protocol is effectively a Ethereum coin that we have created home coin, which is on top of the Bacon Protocol. And the idea is basically a new way for someone to purchase mortgages, meaning mortgages are those kinds of product where basically there's a whole ecosystem built around both making them and purchasing them. And this is key to purchasing them like a government or bank would purchase them, except it shares the profits with the coin holders versus puts it in a savings account or keeps it on the balance sheet at a government. So the key there really is exposing people to a whole market that they haven't been exposed to before. So real estate is a tough market to get into. It's expensive, and this allows any coin holder anywhere in the world really with a DeFi wallet to be able to invest in real estate and get some of the return from that. And the trick there is really this idea that we've created a kind of a stable coin that plus we call it. Basically the idea is a kind of a next generation stable coin where not only is it transparent, so we share with you what backs it and the houses and everything like that and the value, but we also are decentralized. So the liens on the homes are NFTs. So we wrap NFTs around the liens, but the liens are actually done at the counties all over the United States. And so that's decentralized. The houses are obviously distributed. And of course, the borrowers and the payments are distributed.
Mm-hmm. Yeah, very cool. And yeah, you're right about this being a hard industry to break into. I feel like the banks have a stranglehold, and especially now, people that are trying to buy their first home, you just go to the bank and you're at their mercy. Right. So, and now talking about like investing into mortgages, or for people that are investing and looking to get returns in different ways, what comes to mind for myself is sort of like mortgage-backed securities, or how do we invest in a mortgage besides just taking out your own mortgage and having to pay that. How does this specifically help investors over that kind of traditional mortgage-backed security investing?
Well, there's kind of two advantages it has. One is the return. So the protocol is returning currently about 3 to 5% return, which is pretty great compared to a mortgage-backed security. The other is the size. So you can put $100 in, or you can put $1 million in, and that's not common in mortgage-backed securities. And then the other is the ability to really, get in and out of it quickly if you'd like, right? And so the coin is unique because it returns 1% just for holding the coin, which is something that no other stable coin does. You get 2%. Now there's a kind of an upgrade that we're doing, so for locking it up for 90 days, and if you lock it up for longer, you get the maximum rewards, which can be 5% plus. And so that's kind of key when you think about people exposing themselves to the mortgage market, because mortgages are generally pretty large. The average is, I think, about $300,000. So that's not something that most people are going to invest in. And of course, the problem with getting your own mortgage is that's single risk, right? So if something happens in that neighborhood or to that house, then you lose or could lose your investment. In this case, you're invested in houses all over the country. And in fact, they're actually underwritten to what they call the Fannie Mae standard, which is the same standard that the government uses for their $3 trillion worth of mortgages that they carry on their balance sheet. So it's generally considered to be high quality.
Very cool. And yeah, I like that last part there, because I've heard in the 2008 crisis of just like mortgages on houses that were for people that couldn't pay, and there's foreclosing, and like who knows the quality of the mortgage-backed securities that you're buying, right? So I feel like that's good to have a standard. Now, as you mentioned at the beginning, it's sort of hard to break into this industry. Can you talk about the journey that you guys have had so far, and where exactly you're at with having all of these distributed mortgages around the US and having people come and invest into it?
Yeah, well, we actually bought a mortgage company. And that's how hard it is to break into the industry. So we bought one about 5 years ago and retooled it from the ground up. So the journey we took was really how to solve the mortgage problem from the consumer perspective. So we started you don't have to enter a lot of data. We collect it all for you. And we focus on really how much money you're losing and kind of analyzing your financial situation before you get the mortgage. And that's unique in the industry. But then what we realized is as fast as we could close a mortgage, so we actually have closed mortgages in 24 hours, it still was taking up to 30 days to fund the mortgage. And that for a consumer is not a great experience. You kind of want your money as soon as possible. The other thing is that those mortgages that we all know and love, the 30-year mortgage and the 15-year and all that stuff, are loved by banks but not by consumers. A consumer didn't wake up one day and say, I want a 30-year mortgage. They basically would like much more flexible types of products that allow you to pay them forever if you want, or pay them off quickly, or refinance them easily. And so the two products that we built on top of the HomeCoin and the Bacon protocol were one, smart locks. So it's basically like a HELOC, except it's fixed rate. So most home equity lines of credit are ARMs and adjustable rates, so they go up and down with interest rates, and that's a concern for people today. Smart locks don't; they're fixed rate. But that's only something we could do because we have the flexibility of the protocol behind us. And then the other is the ability to instantly refinance your home. The investors in these really care about cash flow, right? And so they want that return, and as coin holders, you get that return, and you're focused on that. You're not necessarily focused on all the refinance paperwork and updated documents and everything like that. So because you're focused on that, there's an ability to take that Fannie Mae mortgage, which is, as I mentioned, quite high quality, and know that we already have the documentation for it, and refinance it, say, from 3.5% to 3% with just a button click, which is, of course, kind of the magical experience we all have come to want from cryptocurrency and the blockchain.
That's great to hear, Karl. And now you mentioned that there's a two-token system, and one of them is a stablecoin. Now, there's been a lot of news recently about stablecoins, especially after the UST crash, and then concerns about Tether, which has been a story for the last 10 years, and nothing has really happened. But a lot of people are curious about stablecoins and how exactly they're backed, and if they will remain stable. Maybe you can touch a little bit more on the stability of the stablecoin.
Well, we really got lucky in the sense that we were able to kind of start from scratch and have some first principles that were, I think, a little bit different than USDC or Tether or Terra or a lot of these other stable coins. They were really born at a time when cryptocurrencies were nascent, and now they're pretty mature, and we're able to build more decentralized systems. So our goal, and the reason we believe strongly in the approach that we've taken, is really to be, one, transparent from the beginning. So there isn't a bunch of auditors who audit us other than the people who normally do that in the mortgage industry. We just publish what the homes are backing the coin on the blockchain. So you can go to the website, or you can go look at the blockchain. We think that's super important, as we've all now found out, right? If people knew what was backing some of these coins, they might have done something different. And I think it's also important that it's liens on homes. So it's collateralized against something, meaning it's not just a promise to pay. It's a home, and you can take the home away if they don't pay. And that is a kind of different approach than a lot of other people have taken, as we all know. Even USDC is basically backed by money in a bank account somewhere, which is not very decentralized. In this case, it's houses all around the country, right, and liens on those homes. And that's interesting, I think, because it's off-chain, right? So this idea that we're never going to touch anything off-chain, and we got a lot of feedback like that. Oh, it's off-chain, it's, what do they call it, meat space stuff, we don't do that kind of stuff. I think it's about leveraging that gigantic ecosystem. It's a $13 trillion ecosystem that is stabilizing governments and banks all around the world. And if we can bring that to the blockchain and use it as a way to stabilize currencies, in this case a stablecoin, I think that's a net positive thing. And then on top of that, you get a return And that return isn't generated from rewards or marketing dollars or whatever it might be. It's basically people paying their mortgages. And, that's one thing that people tend to pay. Even in 2008, as you were kind of alluding to, at the end of the day, the default rate was 10%. You think about that, that's not what we're talking about with some of these other stable coins where the default rate is almost 100% in some cases.
Yeah, great information. And I haven't seen any of these stable coins backed by homes, and you mentioned there about the other coins. I was looking into some of the major coins that are backed by commercial papers, and that could be a bunch of different things. And it's really could be just a bunch of pieces of paper that says, we'll back
literally.
But have you seen other stables attempt this or do this, or is there a reason why USDC and T don't also have real estate homes as part of their backing for the coin?
Well, we hope those coins and others, will just buy Homecoin, right? That's a great way for them to stabilize, their asset base. And we're having some of those conversations and have had them in the past. In the past, it was kind of poo-pooed because the return wasn't quote enough, but it's a real return that's durable. And that's one of the other things we're focused on is this idea that it's durable over time versus being, 2 months or 1 month or whatever some of these others are. There's a couple reasons that you haven't seen it. I think one is it's really hard. You really have to be a mortgage company, first of all, and we're open to all mortgage companies kind of moving to the protocol. We're the first one, obviously, but we hope there's thousands of them in the future. I think everybody who's tried it before kind of has thought about this idea of we have to move the whole ecosystem on chain. And there's a couple other people who've tried that. They've actually created their own blockchain, which I don't think is a great idea. I think, Ethereum's pretty good. And you want to leverage the ecosystem. You don't want to try to go build your own. I kind of look at it like the early days of the internet. It's kind of like AOL versus the internet. AOL tried to go at it alone, and we all know who won that battle. So, I think the attempts before have really been more centralized and more monolithic than what we're trying to do. And because of that, they've had trouble growing because, it's a lot of work, right? And you need lots of different participants in the ecosystem to help out. In our system, there are going to be originators who are people who create the mortgages. There's going to be servicers or the people who collect the payments. And there's going to be all kinds of other people, appraisers and others that will integrate into the ecosystem. And we're open to that. And I think that's how you get to an open, decentralized system is start by being open and transparent and growing from there. And other attempts have not done that.
Mm-hmm. Great. Thanks for that, Karl. And you mentioned that mortgages and real estate people, they love cash flow. And so with this 2-token system, there's also some kind of cash flow that you're getting. Maybe you can talk about how that works.
Yeah, so the 2-token system is the governance token is Bacon, and that really controls what mortgages go into the pool, what requirements we have, and they vote on things like we just did some voting based on the reward system, and that is a governance token typical of the others that are out there, and I think we do use that as a reward for people participating in the protocol, particularly now. I think it's about double the rewards that you would normally get. So other than that, it's just a normal governance token. Homecoin is kind of unique, right? So it's different because you buy it basically, and then you stake it for a time period, and then you get returns based on that, right? And so I think that's one of the key things is this idea that you can buy a coin that one returns you money just for holding it, right? And the other is for staking it, but it's durable. I mean, the mortgages inside that pool are 15, 30, well, most of our 30-year mortgages. And so it's just a very different animal when you're thinking about your portfolio. And I think that's something we haven't had on the chain yet. Like when people talk about, I always found it was really interesting, like people talk about interest rates, they're talking in months. Well, nobody outside of the blockchain thinks that way, right? Banks don't think about interest rates, over months, over years. And in mortgage, they've been a tool that's been used by governments and companies and banks for a very, very long time to generate stable cash flow no matter what the market looks like. And that's, kind of in these times, it's super important to think about, like, where are you going to put that 10% of your money that you always want to have access to, that's always going to be safe? And mortgage is a great place to do that, because even in the crisis, like I said, there was only 10% default, and that's the worst we've ever had. I mean, think about what that really means from an investment perspective. And then just to put it into context, these are used, by banks and governments. So you look at Wells Fargo. I mean, they hold $275 billion in mortgages on their balance sheet. Mm-hmm. There's a reason for that. They're not dumb, that's for sure. And we're hoping that home coin, simulates that, except it's a direct relationship between the coin holder and the cash flow that you're getting back. And it's something that everybody in the world has access to, which we think is super important to share this, innovation really with everybody around the world. And most people outside the United States are effectively locked out of home ownership in the United States, and certainly real estate investing.
Mm-hmm. Yeah, no, great point. And that is a huge barrier to entry. Just being able to have a small amount of capital to diversify into the real estate industry, I feel like is a great opportunity. Now, how is Bacon Protocol and your team continuing to grow? Is it just like acquiring more properties and mortgages, or like finding more borrowers and lenders? Like, how do you guys grow?
Well, the good news is there's a lot of people out there who need mortgages. And so that part is pretty much solved. And the reason people are excited about the product is it's not tied to the federal interest rate. So that's a cool feature. And as well, I talked about some of the differentiations of the types of things that we can do with it. So on the supply side, so to speak, we have plenty of supply. I think on the coin itself, it's really growing the people who hold the coin, right? And we've been very thoughtful about that process. And, making sure that we built it in a way that helps align the interests of our coin holders with the interests of the home holders, meaning the people who are getting mortgages. And that has taken some time and effort, right? I mean, I think that's the real key in these systems. If you align everybody's interests, then things go great. And if you don't, as we've seen, things can go south pretty quickly. And I think you look at a lot of these coins, and the interest is, toward the people pumping the coin or trying to make money or get as many rewards as possible and all that stuff, versus the whole community of people who are using it. And in our case, that's, basically mortgage holders and coin holders. And I think we've pretty much got it. Like, we've made some changes recently that allow us to see more clearly how long people want to invest money in the system, which was one of the key things we didn't have before. And you could argue a lot of the stable coins have made a mistake on that front, because they didn't know how long people were going to hold the coin or stake the coin. And when too many people started taking it out, they ran into trouble. And in this case, we're trying to be more thoughtful about that and align those interests.
Mm-hmm. Definitely. Okay, Karl, what is the best way for people to learn more about the coins and just about how the ecosystem works and to get involved with the community?
You bet. Baconcoin.com is where you go to find out everything about Bacon, BACON, coin.com. And we've got a white paper that describes the system and kind of the future that we're thinking we're building. I'm not thinking about it anymore. And the ecosystem and the community, we have a Discord, so they can hop on the Discord. And we have a very active community. We do AMAs every other week, which is a lot of fun for the community and for me and for my co-founder, Alan. And that's the best way to get involved.
Very fun, Karl. I will leave those links in the description box below as well. All the best with Bacon and home and growing this ecosystem and improving mortgages. All the best to you and your team, and let's follow up in the near future.
Great. Thank you very much for the time.